Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, going to give you a lesson on Fibonacci channels. Now, obviously, you need a channel tool, and TradeStation, I think, has it. I'm not really sure, but I know for a fact that TradingView has it, and TradingView is a very popular platform. And you can get a free TradingView platform. I'll put a link in the description of this video. If you decide to buy TradingView through that link, I'll make about 75 cents. So I'm just that, I guess you have to say that. I'm not doing it to make money on it, but I'm just giving you the opportunity to click on it. You can download TradingView, and you get, it's a free platform, but I don't think you get all the bells and whistles. I'm not sure. I pay for my TradingView, but anyway, besides the point. Also, before we get into the lesson of Fibonacci channels, I want to make a suggestion. I suggest that anybody, no matter what walk of life you're from, that you obtain this book. This is the 38 letters from J.D. Rockefeller to his son, and it's an incredible book. They're personal letters that he had written to his son, and they talk about everything, about his perspective on money, life, his philosophies, and I think it's really great for traders because J.D. Rockefeller came from poverty, and Standard Oil was at the time one of the largest companies in the world, and he was the richest man in the world, next to Carnegie. And there's a really interesting letter where he says that Carnegie came to visit him at one of his homes, and they have a conversation. It's fabulous. So get the book, thank me later. And if you do get the book and read it and enjoy it, you have to enjoy it. I mean, you have to be, I don't know if you don't enjoy this book, but leave some comments for me. Hey, I got the book. I learned this. I find myself, even at 59 years old, I'm yellowing out things. I got the book as a gift around Christmas time, and I it's phenomenal. It really is a phenomenal, phenomenal book. Okay, so let's get into the lesson. So enough of that. So as we know, Fibonacci itself is just horizontal support and resistance, right? So I can click on this fib retracement. Hang on a second. I can't move myself. Yeah, I can. I'm going to move myself over here. So I can, I don't know what that is. That's the channel. Fibonacci retracement itself is just horizontal support and resistance, right? So from here to here, whatever, we got horizontal support and resistance. So on this, we'd have horizontal resistance. The opposite way, we'd find support. And we all know how to do that, right? To the left, higher than, when last time I traded higher, what's the lowest point, reference price, all that. But what a Fibonacci channel does for you is it basically gives you non-horizontal support and resistance, and it also basically tracks it's basically trying to move into the future to see where future resistance would be, using Fibonacci extrapolated off of two highs against a reference low. Now the difference, it's quite interesting. If we look at a pitchfork, Andrew's pitchfork, which is a great tool. Let's see, where is it? Yeah, I got a pitchfork right here. Pitchfork, you need 3 points. You need a high, a low, and a high to project the pitchfork into the future. And I'll go over a lesson on pitchforks. I studied Dr. Alan Andrews, find a lot of his stuff very, very interesting. But I don't use it. I use Fibonacci more than I use pitchfork analysis. So if we were using pitchfork, you need 3 points. You need a high, you need a low, and then you need another high. So here you get the pitchfork. This is the meridian line, and generally a pitchfork is only 2. These are actually extensions. I think they would be called shift extensions, if I remember correctly. But this is the pitchfork itself. So it offers semi kind of vertical support and resistance, but the Fibonacci channel does more. It actually, I like it in the respect that I could use Fibonacci with it itself, and also it gives me an idea of like where congestion zones are a little bit better, and then we're going to use a technique with congestion zones and use the Fibonacci ratios to project downward or upward support and resistance off of the Fibonacci channel itself. So let's get on to the Fibonacci channel. So let me move myself back, like I'll put myself right up here, and I'm going to Fibonacci channel. So with the Fibonacci channel, you're going, like the pitchfork was high, low, high, right? Fibonacci channel is not like that. It's a high to a high circling back down to a reference point low to project the prices up into the future. So let's scoop this down. So I can go a high to this high and circle back down. So let's just do that. So let's say the marketplace is doing this. We don't know any of this, but we can go from a high to high and we could circle back down. So you see this is non-vertical. I mean, this is vertical kind of support resistance. It's more like a big Andrews pitchfork, right? So if we're looking at this, we could say, and the market's moving forward, okay, we could say we got congestion here. Okay, we haven't broken out of the channel yet. You know, we're just trading within the channel. But let's say we want to project upward and downward. Okay, before any of this happens, what we could do is we could look at like where's the channel? Well, we got a high here. We got we can even go here, a high here, and a low here, or you can go a little bit tighter, high here, low there, within the channel itself. Now, obviously, if you use the highest point here and then the lowest point here, you're getting a little bit more aggressive for your target. If you're using this high against this low, you're becoming a little bit more conservative for your target. Now, that becomes subjective. No hard and fast rules. Okay, so what I'm going to do is I'm going to use this high against this low. So I'm going to take the high, which is 163. I'm in the way here. 163, I think 28, something like that. 163.28, 163.28, 163.28. And I'm going to look at the low right here, which is 161.34. That gives me 194 pips. So what I'm going to do is I can project upward and downward. So if I know if I'm breaking out of the low point of this channel, I could use what I'm going to do right now for projection downward to see like where I should find some support, potential market exhaustion. If I'm breaking out of the upward part of the channel, I'm going to be using the calculation that I'm going to do right now to try to project upward to see where resistance could come, or a profit target. Let's say we have a system that gets us long here. Now, of course, we wouldn't know this yet, but since we have it, let's just make believe that we have a system that gets us long here. We could look for a profit target. So we got 194 points. So I'm going to take 1.94 and I'm going to multiply by 1.382 or 1.618. Extension. So I'm taking the consolidation or what I deem this as, and I'm taking that and I'm multiplying by the 1.618 or the 1.382. if you want to be conservative, you go 1.382. You could do both, right? So 1.94 multiplied by 1.382. That gives me 268 points off of this top upward. Now, if it was breaking downward, I would take 268 points off of the bottom to project. Okay, so let's say this top was again 163.28, 163.28, and I'm going to add 2.68 in. 165.96 should be a top. That's the 0.382. What's the top? 166, the figure. So what you just did was you calculated a future resistance point by using the channel and using Fibonacci ratios. Now, obviously, if it went a little bit higher than this, you would use the 1.618, but it didn't. It went 1.382. So let's see. Okay, now we could get a new fib channel. We could go, okay, we got a high, we got another high, we could circle back and get another channel. This channel is still good because it's based off of previous price action. But you're always moving with the market, so you'd want to get a new channel, right? So let's do this. Yes, remove them. So we got this high. We're going to another high up here, which we predicted nicely. And we're going to circle back around. And we could actually use that low. Okay, so now we have an absolutely we have a new channel, right? So let's lock this one too, so I don't lose it. Oh, bloody hell! Let's do it again. Sorry. Got a high, too high, circling back around to that low. Okay, and let's lock it. And let's move forward. Okay. We don't really have much congestion in here to work with, but we could use this kind of projection in here. It's not really much. I mean, the marketplace was actually moving quite nicely, respecting these levels. But you could play around with it. You could say, okay, I got congestion between this point, all in this little box right here. Right there, we can go high to low and then multiply by the 1.618, and we could do that. We got a high of again, I have another computer that connects to this, and every once in a while it throws me off my own damn TradingView. TradingView will not allow you to have two computers on at the same time. I don't even know why it's the same IP address, but anyway. So we got the high of 165.43, and we got the low of 164.50. So it's 93 points multiplied by 1.6618. It's 150 points off of this low, which is 160. Yeah, 164.50. We get a projection to go down to 164.50 in, 1.50 out. Obviously 163 the figure, so it should find support at 163 the figure, and it blows right through it. But also notice that when it comes back up, it acts as resistance. So now what's the next level? 1.82. So if I take 0.93 times 1.82, I get 169 points 164.50, 1.69 out. I get another projection, 162.81. So where's 162.81? Over here. Like right there, 162.82. Very, very close. And then it's obvious we could jump to 2.236, right? So 0.93 times 2.236 gives me 207 points, 164.50, 2.08 out, 162.42. So you can notice, like, it's really kind of breaking down. 162.42. Is that the right price? Let me see something at a low. 164.50. So 162.42. Over here, whatever, 38. So as you can see, and like I said, this was not a really strong congestion area. I mean, it lasted just a few hours, and then it broke down lower. So remember what I just tell you. I said that the tool itself is you're looking for a high against another high. You're circling back to find a low pivot point to work off of. Andrew's pitchfork's different. It's a high, low, high, and it throws out a pitchfork with a meridian line. This is actually projecting in the future support and resistance based off of a leg, actually, right? A leg. And then when you find congestion within that leg, which we just showed you on the first one, worked out wonderfully. I didn't plan it, but it did. Whereas we had the congestion area and we multiplied the difference in points by the 1.382, we found the top at 165.95. It went to 166 to figure. So, like I said, I hope that you like this lesson. If you like what you see, give a thumbs up, like and subscribe. Leave some comments for me. Definitely get yourself this book. And if you want to pick up a free TradingView, click my link. Appreciate it. Cheers. See you in the next video. And remember, always enjoy the party, but dance near the door. Cheers.